So hello everyone. So today we are going to discuss on trading master class, which is the professional level. So so this class nothing to do with growing for other things, some other stuff. So we have three stages, three area in trading. Number one we have the technical part, and then number two we have the trading psychology. We have the second one is we have risk management part. Number which is the third one, we have the trading mindset, which is the trading psychology. So or you can just break it down number one we have technical analysis. Technical analysis your drawings in the market, like your drawings you want to predict whether the market is going to upside or is going to push to the what to the downside. So secondly we have the trading risk management. So trading technical analysis take 10% in trading. So risk management takes the 20% in trading industry. So while the trading mindset, which is trading psychology, takes over the 70% in trading, which means up to now there is works for us to cover. So but take it easy, nothing complicated, nothing easy. So so as we did, my student, we all discuss on technical analysis part, which is the 10%. So most traders focus on what the 10% of trading, which is the technical analysis, which is the drawing. So they ignore the risk management and then trading psychology part, which is the main the main the main why people are not succeeding in trading, because they ignore this thing, which is the risk management part, and then what trading mindset part, which is the trading psychology. How you can build your trading mindset, which is what if you come to the market, it should be in what in check. So like I said now, so once if you now I didn't but I didn't mean you should ignore the technical analysis part. Okay, firstly, you have to figure out what is working for you normally in technical analysis part. So the mentor you are going for to teach you is only telling you that okay, this is the original, this is the way that you are going to follow. So the main work is depend on what is depend on you as a student. So you have to apply the same thing over over a long period of the time, and then see what is working normally for you and then what is not working for you. So you can find something that is normally is working for your mentor but is not working for you. So it's okay to ignore it. So and then keep taking what is working for you. Have you understand? So this is the main thing. So this class, like I said, is like the psychology master class part. So how you can figure out your trading psychology. As you know, we are all human beings. So emotion is only gonna affect us, even though if we know everything in the market. Although all these big traders outside there, so they still emotional, yeah, it's still affecting them. Why? Because we are all human. So we are not we never gonna remove emotion in our body. So which is once if you came into trading, so there is still fear, which is fear. There is a greed, there is a FOMO, which is fear of missing out. So these three psychology part still gonna affect our emotional pain, which is still gonna affect our how we how we react to these things. So this class is mainly for what? For the professional part, which means if you know that you have enough understanding on that, which is you understand everything regarding the market, like you understand all this market structure, all your zones, all your confirmation entry. So you figure it out. and then what you understand what is working for you, what is not working for you. So next thing to do was only what focus on those two things, which is the risk management part and then what the trading psychology part, which is the trading mindset, how you gonna like manage your own emotion once while in your trading, or once if you came into trading. So there is a two main, there is a like three like emotional part. It means mostly traders are messing up. So number one, there is a what? There is a fear, which is like there is a fear number one, and then number two there is a, let me list out for you. So the number three we have like the greed. Number three we have fear of what? Fear of missing out. Number four we have revenge trading. So this like these four main psychological part that we as a trader we have to like work on it. So number one, which is the fear. So assuming let's say fear is only affecting traders in a situation whereby you are fearing something. So assuming let's say you enter a trade and then what you are feeling like so this is fear. Like once the market give you opportunity and then you are fearing, so you are doubting. Let's say don't enter. So something is talking to you, like it's telling you that don't enter this trade. Maybe the market give you another loss, so you are doubting yourself. So fear is messing you up. So secondly, we have greed. So greed is like you are too greedy. The market give you good profit, and then what you refuse to take the profit, and then you are thinking more. You are thinking like, let's say if you normally you are targeting this. So let's say you are targeting like $100 in a trade, and then the market give you the $100, and then you are still greedy to expect what 200 or 150. So the market just give you the 200, and then what later on the market can reverse. So this also tell you that greed affects your what your decision making. So most this psychology part so mostly affecting traders, for those traders that didn't have what that didn't have trading plan. So trading plan is going to help you to stay longer in the market. So I will going to like share my own trading plan for you guys. So and then what keep sticking to that plan. Don't ever break it. So don't ever what break the trading plan. Don't ever try it. So what just keep following the plan. So assuming let's say it's normal business. Let's say you're gonna like is let's say a man that is working on a Monday market. So normally our Monday market. So this man, do you think that this man didn't have a trading plan? Although it's hard, each and every market, each and every businessman has its own what trading plan for him to what to follow it through. So at the end of the week or at the end of the month, he's going to sit down and then calculate what profit did he gain. So it's either loss or profit is going to is going to write it down, or you're going to like plan each and every product is going to purchase or is going to buy next thing. So he's going to calculate which product is giving him more profit, and then he's going to what you're going to stick for it. You're going to buy it, and then what came to the market and then sell it for the people. So same thing in trading. You have to like have a good trading plan for you to what to keep following it day in day out. Never ever try to break that plan. So once if you break that plan, so don't ever try to break the plan. It's much more it's much more it's much more good. So let's say let's say assuming the market, like I said, is you are targeting, so you are targeting, assuming let's say in your trading plan you wrote it down like you are targeting like $50 in a trade, and then when the market gives you the same 50, and then you are doubting, you are like expecting more. So yeah, you are expecting like the market give you additional like additional $50, which makes the 100, and then you are like targeting 100. So normally your trading plan tell you that yes, this your technical analysis. So mostly it is giving you what this amount of money, and then what something kicks you in your mind say that you are, so just wait a little bit and then target more. So this was to tell you that greed is affecting most traders. So in a situation whereby you add additional profit in your normal trading plan that already tells you, so this was great. And then also we have fear of missing out, which is FOMO. So fear of missing out is a dangerous emotional part that is mostly affecting retail traders. So it's affecting each and every trader. So the way you are going to tackle this emotional part is what? Firstly, I said stick to your trading plan no matter how the situation it is. So this one thing, is going to help you longer in this market. So it's better for you to follow your trading plan and then lose a trade. So this was to tell you that this trade is a good trade. So than to what? Than to break your trading plan and then make profit. So write this thing at the back of your mind. So it's better to what? To follow your trading plan and then lose a trade than to what? Than to follow your trade that than to break your trading plan and then make profit. So this is bad trade for each and every professional trader. So each and every professional trader that you see outside there, so they have their own trading plan for them to like follow. They are always following it, they are always sticking for it. So like I said, we have FOMO, which is fear of missing out. So assuming, let's say you are expecting the market to come to your zone and then what, to took a buy opportunity, and then what, the market refused to, like, you at the time the market get to your zone. Let's say you are looking for buy and then the market gets to your support zone or your trend line support, and then you mark it out and then you are waiting for the market to tap your area before making any decision. So the market, you by the time the market tap your zone, you are not active in the market, and then what, the market start rallying to the upside, start pushing to the upside, and then the market already pushed to the upside, and then you came and then you check it if the market get to your zone, and then you are going to enter the trade. So by the time you check your phone, and then what, the market already tap your zone, and then start pushing to the upside, and then something is telling you that don't miss this trade. Oh, you can just enter. Oh, something is just telling you on your body. So so at that time you are going to like manage your emotion. So this was very important. You have to like manage your emotion. So you have to tell that no, I'm going to just wait for another entry opportunity. Since that what, opportunity is everywhere in the market. So today there might be no opportunity. Next day there is a opportunity. So most traders they didn't understand these things. So that is why. So this is the FOMO, which is the fear of missing out part. So once if you start hearing this emotional feeling in your body, so it's something that is just telling you that do something, do so. So by the time you realize that something is not good, so you have to like just remember you are always following your trading plan, and then you are staying disciplined and staying calm, taking what you understand and then leave the rest. Like I said, me too, I'm not understanding everything in the market. So once if I came into market and then I don't see any of my like entry criteria or entry confirmation, or I came into the market and then I see something that I didn't understand, so it's better for me to what, to ignore the market than to what, than to force the market to give me opportunity. So at the end of the day I'm going to lose, I know. So that is why I'm just what, only taking what me I understand personally, and then what, ignore the rest, ignore the noise. So this was the FOMO, which is fear of missing out. It's mostly affecting traders. So fourthly, we have like revenge trading, which is revenge trading is like, let's say assuming you enter a trade and then what, the market picks you out, the market like picks you out, hit your SL. So next entry and you get an entry, you like you enter a trade, still again the market remove you out still. So in your trading plan, assuming let's say for example you wrote like you are only taking two trades in a day, and then the market just you hit two SL, which is two loss at the day in a day. So after you hit these two losses, and then something is just talking in your mind, say that take another trade to recover, take another trade to recover. So you forget that you are following your trading plan, and then you break your trading plan, and then you took another trade. So at the end of the day, maybe the market is like not 100%. You like there is a chance of 100% you are going to lose the that trade. So this was very important to only follow your and stick your trading plan at all in whatever situation you are. Just try to keep following your trading plan. Don't ever like break it. So like I said, I'm going to drop my all my like my my trading plan, how I'm following my trading plan. So how like you are going to rotate. So I'm going to like send you for you to like to keep like following it. Don't ever break it. So like I said, this emotional part, it's never going to remove. You are not going to like you are only been what been manage it. You never ever you never ever going to remove your emotional feeling in your body. So we as a trader, we are only what we are only managing our emotion. Assuming let's say me, I know that for example, I'm taking only two trades in a day, and then what the market gives me a two confirmation, two entry in a day, and then I take it. So once if my body is telling me that something is you like take another trade for you to like make good to make more money, take another trade. So I know that I'm following my trading plan. And also I know that there is an emotional feeling that affect we as a trader. So I'm going to like once if I get this kind of situation, so I'm going to like manage myself. So I'm going to just stay calm and then stay disciplined. So I just close my laptop or I just close my phone and then walk away. So it's better for me to do this than to what to follow the reverse trading and then take another trade. So this was to tell you that emotionally you're never ever going to like disconnect your emotion in trading or in real life. So it's like it's better for us to only been managing our emotion. Once if you hear something is wrong, so this was the main emotional part that most traders that affect most traders. So it's up to you to manage it and then towards stay disciplined and then stay calm. So once if you hear the word discipline, it's like to stick to your trading plan, to just not do anything outside your window. So not do anything outside your trading plan, and then what keep sticking to that trading plan for a long period every time. Like I said, before you ever get into this stage of emotional part, emotional like managing your emotion, so you have to understand that you understand technical analysis part, and then you understand the risk management part. So before starting understanding or starting managing your own emotion. So if these two things are not in check, it's better for you to leave the emotional part and then go and find something that is personally working for you in the market, which is the technical analysis part. So you have to like be before you understand what is working for you personally, you have to you have to take at least 100 to 50 trades, and then you have to write it down and then or screenshot that trade you took, and then you have to like see before and after of each and every trade. So you have to like see what is working and then what is not working. Assuming let's say me, I took a trade now, and then I'm going to screenshot the trade. So after the market, after the trade plays out, I'm going to like go back and then review what is missing out. So I'm going to like screenshot another. So I have two screenshots. So I'm going to check, was this trade I follow all my trading plan that says that I'm only number one, number one, I'm going to understand the market structure. Number two, I'm going to find my zone for entry. Number three, which is the third one, I'm going to like wait and then market tab my zone, and then I'm going to like see confirmation before entering. So this rule that I wrote it down, am I follow all this plan before taking this trade? So if the answer is yes, then this trade is good, this trade is valid. So I'm going to like take it as good trade. I'm going to write it down. I'm going to journal it down. So now I'm really recommend you guys to what to start journaling. So to start journaling your own trade, screenshot your trade before and then screenshot the after it market plays out. So and then see what the market is gives you. So what you also like figure out your mistake you have done and then what keep sticking to it. Like let's say you enter a trade and then what you see this thing happen, this thing happen, this thing happen. Okay, and then the market. So like I said, this emotional part is the hardest part in trading. So so ask yourself why are you seeing why should you like go to your TikTok or go to YouTube and then you are seeing all these technical analysis part. Each and every trader has its own technical analysis, so it's sharing out. So why most traders didn't talk more about the psychology part, which is the master class, which is the like master trading class, which is the psychology part, emotional part. So ask yourself now. So this psychology part is like I said is the hardest part of trading. So you can see like trader is stay long time in the market. So maybe two things is it's not in check. So number one, let's say like the capital. So like you have to get good capital, which is good like scaling up. So if you hear like scaling up, like you have to like get good amount of money before you starting making this big amount of money or like millions of. So you have to like so this capital may become in two ways. First, there is we have like the Profem part. So Profem is a company that's going to give you the money you are going to trade it for them. And then secondly, we have like the investor. So investor might become in your family or in your friend or someone else that has a more amount of money, so it's willing to like invest on you so that at the end of the month or at the end of the day you are going to like make good profit, and then you are going to split the profit or like 50-50 or whatever your decision. So secondly, we have number one, I said the lack of capital. So number two, there is the emotional part. This class that we are doing. So emotional part is mostly, like I said, is the hardest part of trading. So maybe his or her emotional part is not in check, which means that once if you get into his trading, so this for emotional part is mostly affecting his decision, which is the fear number one. Number two, there is a there is a greed. So number three, there is a FOMO, which is fear of missing out. So number four, there is a revenge trading. So this four emotional part mostly affecting him or lack of capital. If you see someone that stay longer in the market and didn't succeed in the market, so like is so so this was the main class. This class is very very important for you as like professional traders. Like I said, before you are going to understand this in this class that we are doing, so make sure you understand the technical part, which is the like your drawings in the market in the trading view. You understand them. So this drawing all is what is only 10% in trading. So if you like, most traders nowadays are only focusing on the technical analysis part, which is the drawing. So you can see traders is still longer in the market and still focusing on the technical part. So this technical part is much more easier. You can find it on YouTube, on whatever, on TikTok. You can find it and then apply it. But although full class, uh, we did full class with me, which is the technical part. So you understand your market structure, your zone, your whatever. So all this you understand. So next thing to do as a trader, to understand the risk management part, which is the risk management takes like the 20% in trading. So you have to like understand the technical part. So risk management, for example, we did full class on it also. So let me break it down. So risk management is like, it's telling you, okay, how much you are. So if you deposit a certain amount of money, so ask yourself a question that how much I'm comfortable with risking. Although if the market did not went straight in my direction, how much I'm comfortable with losing. So assuming, let's say some traders might decide to just, once if they deposit $100, they like comfortable to what, to risk like $10, and then what, and then they stay comfortable. Once if the market hits their loss or hits their SL, so they are going to lose the $10 that they what, they already planned it. So in case if market like hit the $10, they are not going to like panic, they don't going to emotion, they didn't like feel something. So or some trader might decide to what, to like to take the 20%, $20 risk on $100. So depend, each and every trader has its own risk appetite. So which means you have to like ask yourself how much I'm comfortable with risking, and then once if you figure out how much you are going to risk, and then what the next thing, how much am I going to target once if I enter a trade. So normally in trading, you are risking one, so definitely you have to be patient, and then what, till market give you two. So let's say I'm risking $1, so I'm not exiting the trade unless the market give me $2, which is 1:2, or maybe you can just go something above this, or you can just target 1:3 on 1:4 or 1:5. So this was the right risk management part you have to understand. Or some traders, once if they enter a trade and then the market start going in their favor or in their direction, they start adding another position on their trade. So this was the trading risk management part that you are with, that each and every trader has its own. So if you didn't have your own, you have to like write it down and then keep following it. So the third thing, which is the 70%, which it takes 70% of trading, which is the trading mindset, which is the trading psychology. So trading psychology, like I said, is the hardest part of trading. So maybe if you didn't tackle this trading psychology part, it's going to take you longer before understanding the trading psychology part. This is the importance of what, of joining someone that already passed through this experience, like me. To you, or you like join my trading class. So this was tell you that only what, follow the steps of what I'm telling you. So, like I said, before tackling this emotional part, you have to like figure out what is working on you on your technical part, and then what is working on you for you on what, on the risk management part. So, third thing is what, you focusing on the trading mindset, which is how you gonna like manage your own feelings. So, like I said, you never gonna like remove this emotional feeling in your body unless what, you have to like manage it. You have to only what, manage it. So once if you hear something is not working, something is not good, so something, assuming let's say you find yourself over trading, so all you have to do is to what, stop trading at that day, walk away, or like have fun with your friends, with your family, with your wife, with your child, so whatever you want to play, or like you can just play a game. So do something that is away, something that not that's away from trading. So so this was the like emotional part, which is the what trading psychology. So I'm going to like drop my trading rules and regulation for you guys. So and then what you are for now you're going to like stick it to are going to follow it step by step, day in day out. Never ever break the rule. So or you can just decide to just what add another trade, add another plans or another rule on that thing or on that like my trading plan that I'm going to send you, and then what keep sticking to that rule, keep sticking to it. Don't ever break the rule. Like I said, it's better for you to what to follow your trading plan and then lose a trade. So this trade, all professional traders they can call it a what a valid trade, which is good to trade. Or than to what than to break your trading plan and then what you and then you make money. So this all professional traders can just this trade is not valid, it's not good, it's wrong trade. So it's work like that.